Hello everyone, this is Chris from GBC Forex Academy. I'm here to give a review for week 17 and a forecast for week 18. The low for the week occurred on Wednesday. This should be on Wednesday. This was the low for the week. Then the high for the week occurred on Friday. This should be the high of the week. On the fundamental part, we observed that the employment index came out better than expected, and equally to ADP non-farm change was better than expected. The federal rate remained the same. Then on Friday, we had a non-farm employment change that came out less than expected. Back to the technical side, we have that the bullish push was below the previous week's open. This was the previous week open thereabouts. So the bullish push was actually below that. Then equally to the week actually closed bullish. The week closed bullish. So let's go to the weekly chart and let's see what I'm trying to say. We closed bullish. Okay, look at this. The week actually closed bullish. Although the week closed bullish, that doesn't mean that we'll just continue buying because price was actually priced into a supply zone. Because that will take us to the 4 hours. That will take us to the 4 hours. On the 4 hours last week, when I was giving my forecast, I said the first thing I would tell you to do on this very chart is to stay away from the chart because it was the first week of the month. Price was bound to range, and there was a lot of ranging. A lot of persons were stopped out, and I equally said equally too that this very zone here, you watch my video that price was bound to violate that very zone. Why was price bound to violate that very zone? Because I said that this very zone here has been mitigated. So since this zone has been mitigated, what we now have to the downside is we now have something like this. We're supposed to have something like this. Okay, if I stop here, from here to here, we're supposed to have something like this, from here to here. But because it has been mitigated, what we now have, if we are taking it from this very side, what we now have is something like this coming here. This zone is a fresh zone, then of course coming to this very downside. So let me remove this. Let me remove, call it remove this. Okay, let me remove this. So it therefore means that at this very zone here, look at, we have a bearish engulfing taking place here. We're actually supposed to sell, but I won't just sell. I'll have to wait for price to take a major low. That is one. Price could equally give a false break here. Then of course price can equally come down here. That is one option we have. Then equally to the other option that we have is price could just go on and just start buying and buying and buying. So what we do this in this week 18 will depend on what the price actually does in this very week. So of course at this very junction here, we are very bearish. We are very bearish. So we just have to wait for further price action for us to move with the confidence of being bearish. But if I see something like this, if I see price breaking here and comes down, moves like this, therefore means that I will definitely become bullish. But if price just does something like this and gives a bearish engulfing, this will becomes a false break, and one might risk taking this trade to the very downside. So for this very week, though we close bullish on the weekly candle, I will say that we are bearish. Now, when do I intend to put trade? On Wednesday, we're going to have interest rates coming from Great Britain, and definitely we're expecting that the interest rate will remain the same. So I'm expecting that the high of the week will be on Thursday. So I'm not going to place a trade until on Thursday. I'm expecting to take the trade to the downside. So I am still very bearish for this very week until the chart prints something else. So I'll just wait till on Thursday and see what Thursday presents before I take my trade. So thank you.